Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 5th of April. So for a non-farm payroll week that we're expecting in the next session, we've seen a lot of action this week from a volatility standpoint in the indices and in the currency. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD. And we can see we've had a really good bounce off that 64 cent mark, that sort of 64.80 to 90 mark. And we've gone all the way to 66 again. So we've gone 100 pips in the week. It's been a very strong level, this one. You can see all of the resistance through there and the support that's held up at this area here. And it's been a really good trade over the last few days, straight up to the 66, which is where we've seen that resistance. Now, if we go to the smaller time frames, you're going to see basically a very big move up. Once it did explode out of this area here, this is a 1 hour chart. We see the series of higher highs and higher lows that we always talk about. Once it's trading above the moving average, and we know that we are above the support level again, off it went. Now, once it did go, it was going to be difficult to get into because it basically just ran. But you can see, though, that the entry points were very clear. Once we actually did enter that trade from that 65 cent mark, the higher high and higher lows were in progress already above the moving average, and you were able to get that in, and very clear target of the 66 cent mark. So good trading on the Aussie, and hopefully you're able to get that because it was a pretty short and sharp move straight into the resistance. What we see from here now is going to be really probably a little bit more resistance at that 66 cent mark. It's already starting to sell off a little bit. I wouldn't be convinced that it's going to go any longer until it actually breaks this zone like we've talked about in the past. So a daily close above this zone would convince me otherwise, but until we do get a daily close above the 66.20 mark, we're going to look for weakness at this point and any form of lower high and lower lows on the smaller time frame, and we'd look at trading it back to the middle of the channel at around those moving averages. So that's probably the best way to play the Aussie at the moment. All right, US dollar CAD is not giving really a lot of trade opportunities because it's really been very sideways. You can see it's had a big range today, though. It has had a relatively big range today of about, nearly 40 or 50 pips. It has pulled up significantly off its low. You can see that it's trading above the 50 moving average again. We're still a little bit more to go in the US session, of course, so a lot can happen in the last hour. But we can see that we've already picked up to the middle of the channel. While it's in the middle of the channel, it's difficult to trade. So really, you need to go to the smaller time frames and identify any opportunities. You go to a 15-minute chart, more than likely, though, you'd be trading these inside of the session. Now, if you see a series of higher highs and higher lows on the smaller time frame, like the 15-minute, we know we've got a very clear target here of 136. But if this reverses and starts to trade lower on the lower time frames, like a 15-minute, and we see a lower high, lower low sequence, then we aim down to the smaller 134.50 area, which is the bottom of that channel. Until we get a daily break outside that channel, I'm not really interested in doing anything else on it. And look, there are probably better trades to be had than this one we've got. I'll just reset that. And really, you can see the channel very clearly here. So just follow the momentum on the smaller time frames if you really want to trade the US dollar CAD, and just keep it inside those channels until we see a daily close on either side. But it has been a very strong channel for quite some time now, basically for nearly all of 2024. And we're not going to do anything different until it actually does break out. All right, over to the US dollar yen now. This has really done nothing this week. It's been hovering in this zone of a very tight range. You can see we reached this level last week, so we've already reached our take profit on that. Hasn't really given us a new trade. Hasn't shown any sign of weakness, but it also hasn't exploded up either. We are starting to coil a little bit, though. So yeah, look, when it gets up here and it does hover around here, it gives me the feel that it might break through. But until, of course, it does, we're going to leave it right alone. Very tight range. So really, if we start to see weakness and we see a break below the 151, then we look for a move potentially down to the 150. But it's got to be a daily close, not a small time frame close, of course. And if we see a break to the upside, I would be more inclined to let it go past the 152 and then let it test it from above. Now we've got a very solid level of consolidation here. If we do get a break of this level, it is still a very serious zone, don't forget. Like, we've got resistance over here. So it's not like it hasn't been resistance in the past. So we've got to make sure that we keep an eye on that one, make sure that we're not going too quickly. If we get a break above that 152, and it pulls back down to that from above, then we can look at that level for support. So really good opportunities coming, but I think this week's been very flat. So not much you can do with it, but good for the currency itself, though. that it has found this consolidation through this level. So really important there. All right, dollar index. This has done everything it needed to do last week for us again. This has been a trading bonanza, really, the dollar index, which in turn is obviously the euro. We've got a level here that we've broken through, touched the 105, obviously. We're pretty happy with that. Then it did sell down all the way to the 104.20 again, which is the area that needed to break. So we knew that one. Let's have a look at what it does here from now. Obviously, it had a really serious attempt, even in this session, to actually go lower. It failed to actually break through. But again, we've still got a little bit longer in this session to go. Remember, it is a non-farm payroll week. We've got non-farm payroll results Friday night in the US or Friday morning in the US. So that it generally levels out the markets towards the end. We do find these points of pretty important pausing, and this is probably one of them around that 104.20, so I'm not really surprised that it's done that. But look, it's already had the trade up to that 105, which is great, which was the short on the euro. If we get support here, if we're trading above this level on Monday morning, then we're going to look at potential moves back up to that 105. But look, the one we're really looking at is the euro, of course. That's the one that we're going to probably trade. And same deal here. Obviously, it had a pretty reasonable short down to that 107.30 area. Pulled back up to the 20 moving average, and it's struggling to get past here. It was looking a little bit stronger earlier in the session, but it is struggling to get through now. So really, it's just a bit of a watch and tell. I wouldn't be surprised if we just sort of sit here and not do anything until non-farms comes out. But if we're trading, it's really all about the Monday trading now. And if we are trading underneath those 20 and 50 moving averages on Monday, I would be looking for further weakness back down to the 107. But if it's trading above the moving averages and more importantly above the 108.50, that's when I would be looking at potential moves back up to the 109.50, which is 100 pips from here. So that wouldn't be a bad trade, of course, but it still it has to close above this level here for me to be convinced about that. And that close needs to be on Monday. Okay, so either a weekly close, obviously for the week after all of the action is done, or opening up here on Monday. So either way, happy to trade it, but I think I'd probably, with the dollar strength still looking pretty good from where it's landed, I wouldn't mind seeing it actually short off from here. I think it's probably a better trade to go shorter if it's trading underneath the moving averages, because a pretty easy trade down to the 107.30 and then onwards and down to the 107 if we break that level as well. So reasonable moves and potential for that one. And the S&P 500, of course, look, it was, again, trading quite a bit higher throughout the session, all the way up to 52, 57 here. But now it's pushing the 20 moving average and really trying to break on down. So it's an interesting end to the session. Still got a little bit to go, though. Like I said, we've got to be mindful that we've still got another hour to go, or an hour and a half, really, to go of action before the market starts to sort of wane. So just keep an eye on that. If we're trading, really, it's all about the non-farm payrolls. Now, if the daily is trading underneath the 20 moving average, I think it's pretty simple for us. Underneath the 20 moving average and underneath the basically 51.80 is the level I'd be looking for. A break of 51.80 and a 20 moving average on Monday, and I'd be looking for further weakness, and we'd probably be looking down to the 50.80 and 50.50 marks as the targets. But if we're trading above this level, but it needs to be trading above the moving average again. If we're doing that on Monday morning, I would be, then obviously non-farm has not affected the market, and I would be looking at moves up to the previous high at around that 52.70 again. I wouldn't be going any further than that again for all the things we've talked about over the last few weeks. So just be careful with this one. I'd be watching this one really, really closely. Probably a hard one to trade today, but probably a good one on Monday. So if we're trading above the 20 on Monday, we know where we need to aim for. And of course, if we're trading below the 51.80 and underneath the 20, we've also got a target on the way down. So pretty good trading on the S&P this week has been so far. And hopefully it'll give us some good trading early next week. So thank you very much for joining us this week. Have a great weekend, and I look forward to seeing you all next week.